Hi, everyone. Thanks for joining us today. I want to thank everyone for attending, and we have a very good presentation. Janus Henderson Investors is the company that is going to be helping us tonight talk about Social Security. And we have a colleague of ours, Ruben Gonzalez, that's on the call. Ruben is a senior retirement director for the Defined Contribution and Wealth Advisor Services team at Janus Henderson Investors. In this role, Ruben provides advice and consultation to peers and financial advisors regarding some of today's most complex retirement issues, just as Social Security. Ruben draws on his extensive knowledge of qualified retirement plans and the retirement industry to assist advisors and their clients with retirement plan objectives and concerns. Prior to joining Janus in 2015, Ruben was a vice president and corporate retirement plan specialist at Deutsche Bank. Earlier, he held a financial consultant and sales position at the New England Insurance and Investment Company in New York City. Ruben earned a Bachelor of Science in Business Marketing from Manhattan College, and he holds a Series 7 and Series 63 FINRA Securities license. Ruben's been in the industry for over 26 years. Ruben, please.
Thank you, John. All that boils down to the fact that I'm getting old. I mean, at this point, I think I've been doing this for 28 years. And just to share with you, I've worked with all manner of folks in the retirement space, and by far, I think number one topic that comes up is Social Security. It changes obviously, but I think there's a lot of misunderstanding when it comes to Social Security, certainly. And we're going to talk a lot about where Social Security is now, where we think it's going in the future, the different claiming strategies. Spoiler alert, there's probably only one now. There used to be others, but those have sunset. And so we'll kick this off, I think, by taking a look at our agenda. And if you all don't mind, I'll turn off my my video just so you can take a look at the full screen. So here's our agenda. Obviously we're going to cover will Social Security be there for me? I think that's the number one topic that most folks kind of look to. Because again, there's a lot of misinformation there. And then the other thing is, and I'm jumping to the last bullet here, will Social Security be enough for me to live on in retirement? Now, the reality is that for most Americans, or the average American who makes $45,000 a year, Social Security represents about 40% of their income in retirement. So for most people, it obviously supports a big chunk of their retirement. So again, that's something to be on the lookout for, especially when you're getting close to claiming or applying for your benefits in Social Security. And then we'll talk about that as well. Can I maximize my benefits? When's the right time to apply for Social Security and the like? So where I like to start with when it comes to Social Security is a woman by the name of Ida Mae Fuller. And she is the lucky person who has check number 0000001. And that was issued to her in the amount of $22.54. And that was doled out on January 31st of 1940. Ida paid into Social Security for 3 years and contributed a whopping $78. And when she died, by the way, at age 100, she received $22,888 in benefits. Incredible. So for those of you who say, Ruben, I want to maximize my Social Security, this is the way to do it. Again, she put in $78 and took out almost $23,000 in benefits in her lifetime. So way to go, Ida. But the other thing to take note of is that Ida Mae was sort of an outlier, if you will. Remember, when Social Security first started in and around 1940, when checks were going out, the average person's life expectancy was only about 62 years old. And in order to qualify, or the youngest age you could take Social Security out at that point was 65. And so, obviously you look at the demographics today, the average male can expect to live to be about 77 years old. The average woman could expect to live to be about 85 and a half years old. And the earliest we can claim Social Security is age 62. So things have changed radically in 90 years. So the issue here, as you can tell from my first example here, is that people are outliving or basically living longer. And when you live longer, what ends up happening is you put in a certain amount of money into the Social Security pool, but because you're living longer, you tend to take out more benefits than you put in, like item A fuller. Now, if you have a whole country full of item A fullers, that could be a problem, and that's going to put a strain on the system. And so we have to worry about this. So as we know, Social Security was designed as a sort of a pay-as-you-go system, right? So payroll taxes from your current workers go into this Social Security trust and are immediately paid out to current beneficiaries, right? And the good news is, because baby boomers have been at their peak earning years, and they still are, by the way, the trust fund, the Social Security trust fund, has accumulated more than is needed for current beneficiaries, which is good news. The math works. And right now, the trust fund holds about $2.9 trillion, which is invested, by the way, because a lot of people ask that. It's invested in special issue treasury securities. The problem is, as baby boomers start to retire, we're going to see a shift in the number of people putting into the Social Security pool versus taking out benefits from the Social Security pool, and that's what we're worried about going forward. And by all accounts, the year that we have to be cognizant of is 2034, so 12 years from now. And if Social Security isn't reformed in any kind of way, what's going to end up happening in 2034 is the entire baby boomer generation will be fully retired drawing Social Security benefits. And not as many people will be paying into the system. And so every dollar that we get in Social Security benefits will go down to 79 cents. So again, that's something that we have to keep an eye on. Definitely, pay attention to your local politicians, because the sooner we can sort of reform the system and make small adjustments, obviously the better off we'll be. And as you can see on this slide, Social Security is not in imminent danger. So I just want to, I don't want to be an alarmist here. But as I said earlier, the sooner we implement reforms, the better off we're going to be. Now, keep in mind that the government can simply increase FICA taxes if there's ever an issue. So if there ever comes a time when the politicians are a stalemate, and we're at that 2034 date, the government can simply just raise FICA taxes and the problem will magically disappear. That's the easiest thing for them to do. That's probably what they're going to end up doing. But just so you know, there are other things that the government is looking or can do, but it takes a little political will. So I'll just briefly touch on these because, politically, I think this country is sort of at a stalemate. But, I'll just touch on some of the most common reforms out there, just to give you a little background. So one is to increase the maximum earnings that are subject to Social Security tax. Right now, $142,800 in earnings is subject to the 6.2% FICA tax that's paid by you. And then your employer matches that with 6.2% as well. So you can raise that 142.8 to something higher. And that's certainly something that's being spoken about. Another reform calls for raising the normal retirement age. It's been done before. Remember, the original retirement age was 65. Now it's, for my age bracket, anybody who's older than or was born after 1960, it's age 67 for those folks. And yet another reform calls for lowering the cost of living increases. Again, that's something that's politically daunting because it impacts retirees, and retirees are a very powerful political group in this country. And they vote early and they vote in all elections. So reducing the COLA benefits, probably not going to happen, but the first couple of bullets, I think, have possibility. So the bottom line, I think, really is that your benefits are not likely to be affected much, if at all. And just again, all these things that it's going bankrupt, not true. The Social Security Administration puts out these numbers. If you want to fact check me, by all means, you can go to ssa.gov website, and every year the SSA administration puts out these numbers, so you can take a look at them. Okay, so first off, Social Security is one of those few sources of income, right, that we can't outlive. Ida Mae Fuller, for example, lived to be 100. She still receives her Social Security income. Of course, the longer you live, the more your Social Security benefit is worth to you. And I think we see that here on the screen, right? So if your monthly benefit is $2,000 a month and you live 10 more years, you would have taken out $276,000 roughly out of Social Security. If you hit the genetic jackpot and you retire at age, call it 62, and you live 30 more years, you have taken about $1 million, a little more than that, out of the Social Security trust fund. So again, the longer you live, the better off for you, and you can never outlive your benefit. It's the ultimate in annuities. The second thing that's great about Social Security is this thing that we call annual inflation or cost of living adjustments, right? So if your benefit starts out at $2,000 a month, and let's say for sake of argument, your annual cost of living adjustment is 2%, right? In 10 years, you'll be receiving your $2,000 goes to $2,438 per month. In 20 years, that benefit goes to $2,972 a month. And in 30 years, that check turns into $3,623 a month. So it helps you keep up with inflation is the point here. And if you're interested to what the exact benchmark is, it's the CPI-W, Consumer Price Index for Workers Index. And that's what the cost of living is tied to. And just to give you a little bit more color, in 2021, the cost of living adjustment was 1.3%. In 2022, the cost of living adjustment will be 5.9%. So again, there's no way of knowing what exactly the future cost of living adjustments will be, but 2% over time seems to be the average that we work with. So how much can you expect to receive from Social Security, right? So it depends on two things, right? So how much you've earned over your working career and the age at which you apply for benefits. Now, I will say that if you take nothing away from today, remember, nothing good happens with Social Security if you apply for benefits before your full retirement age, okay? Nothing good. In other words, you're gonna leave money on the table always, in any situation. So again, just remember that, because I'm gonna return to it as we go through some of our slides here. So the general process goes like this. First, Social Security looks at your annual earnings over your entire lifetime, right? And then they index that for inflation, and they pick out the highest 35 years of earnings to put into a formula. Now, I want to reiterate, your 35 highest years of earnings, not your the last 35 years. It's always going to be your 35 highest years of earnings, okay? Those earnings are indexed for inflation, totaled up, divided by some number to come up with an average. If you don't have 35 years of earnings, what ends up happening is those missing years will be filled in with zeros, right? So whenever you add a zero to an average, it has the effect of lowering the average. So again, this tends to harm more women than men, obviously. And so the good news here is that you can always improve your work record no matter what. I can be 75 years old, and if I earn, call it $30,000 in that year, I'm going to replace, the $10,000 a year, if that's one of my highest earning years, that I earned in 1983, for example. So you can always improve your earnings history, certainly your highest year's earnings at any point in your life. So don't feel that you're sort of locked into anything. You're not. And if you like the math, this is the actuarial formula that the government uses to calculate what's called your primary insurance amount I'm going to refer to it as the PIA. It just makes things go quicker. So your PIA is the amount that you receive on a monthly basis at your full retirement age. So why shouldn't I claim benefits as early as 62 instead of delaying my full retirement age, or even to wait to age 70 to receive my benefits? Keep some things in mind here. Okay, so, and I'm going to throw some statistics at you. So the monthly Social Security amounts, the maximum Social Security amount that you can receive in 2022 is $3,345 per month, assuming your full retirement age with a cost of living increase, that 5.9%. The average person in 2022 will receive $1,657 per month. And that includes all retired workers, people who apply for benefits early, or full retirement age, or even wait till age 70. That includes everybody. The average age for people to apply for benefits, and I think this is a little telling, right? So the earliest you can apply for benefits is 62. It's really 50 if you're disabled, but let's say for sake of argument, 62. 48% of women and 42% of men apply for benefits at age 62. 27% of women and 34% of men apply for Social Security at their full retirement age, which is 66 for many people. And only 4% of people apply for Social Security at age 70. Now, 70 is meaningful only because you get something, and I'll touch on this later, called delayed retirement credits. Basically, it's a guaranteed 32% increase to your monthly Social Security amount, your PIA, as it were. But again, only 4% of people apply for benefits at age 70. So again, when you're thinking about when should I apply for benefits, those are sort of the latest statistics on when people apply for benefits. But the long answer is that it really depends on your situation. It really does. And we'll talk about that in a minute. So the other thing to keep in mind is that your monthly benefit will be reduced if you apply for Social Security early, right? So as I mentioned, you can apply as early as age 62. Your benefit may also be reduced by taxes. Yes, you have to pay taxes on Social Security benefits, and Medicare premiums will also be deducted as well. Also, benefits could be withheld if you decide to work. We'll talk about that later. I don't want to confuse the issue, but that's something that's possible as well. One of the most common questions I get is, when should I apply for benefits? I just ran a whole bunch of statistics by you. And it really depends on your health status, right? So I've literally, pre-COVID, when I would do this in person, folks would come up to me and say, look, Ruben, I don't have longevity in my family. No one lives beyond age 60, 66. Well, in that situation, obviously, take it as early as you can. Whereas the flip side is true too. Some folks have said, oh, I have tons of longevity in my family. We live to be in our mid 90s. Well, if that's the case, you may want to consider applying for Social Security when you're 70, because you have, genetic lottery, you hit it. The other thing you have to consider is your need for income, right? So do you have other sources of income? Do you have a pension, a 401k plan, IRAs? Do you plan to work? Do you have a business and generate income that way, or real estate property, et cetera? Also, what are your survivors' needs? So if you're married, how much money does your spouse, how much will they need to live, upon your passing? And that's something that we have to consider too, because we will talk about survivorship or benefits for couples as well. Now, for most people, Social Security benefits alone aren't going to make up, or probably not going to be enough for them to live on, even though the average American, that's true. To give you a case in point, someone living in rural Alabama has a lower standard of living than someone living in South Jersey or New York City even, right? So the cost of living in a city that you live in plays a big impact on that as well as the taxes, local taxes and municipal taxes. Full retirement age. So as I mentioned, this is where you get your 100% of your Social Security benefits. Okay. So if you were born between 1943 and 54, you receive your full retirement age is 66 to receive your full retirement benefits. If you were born between 1955 and 1959, your full retirement age is 66 and some months. And if you were born in 1960 or later, your full retirement age is age 67. So what if you receive or apply for Social Security early, right? So as I mentioned, you always leave money on the table when it comes to Social Security and you apply early. So let's say your full retirement age is age 62, okay? You're going to receive 75% of your Social Security benefits. So you leave 25% on the table, okay? If you apply for benefits at age 66, you will receive 100%, as you can see here in the middle column on our screen. So again, you don't want to leave money on the table if you can at all avoid it, but obviously for a lot of people, there are circumstances beyond their control. They have to apply for benefits early. Now, I kind of alluded to delayed retirement credits. So there are three magical years where you receive a guaranteed 8% from the government if you delay or hold off applying for Social Security benefits. So if your full retirement age is age 66, right? If you wait 1 year to age 67, your full retirement benefit or your PIA will be 108%. If you apply for Social Security benefits at age 70, your PIA or your full retirement age benefit will be 132%. So a 32% guarantee here. Now again, easier said than done, right? Some of us may have chronic illness, some of us may not have longevity. So obviously, we're not looking at age 70 to apply for Social Security benefits. We may be looking at some other number. But for those of us who have longevity and who have other sources of income, maybe a pension, for example, maybe waiting is a great way to maximize your Social Security benefits. So if you're interested, you can easily find out the approximate amount of benefits that you can receive from Social Security. So the first place that we'll show you is you can get your annual Social Security statement. You can take a look at that. By the way, you only get your Social Security statement in the mail if you're 60 years old or older. It used to be, we used to get it every 5 years, starting at age, I think, 30. But the government wanted to save money. And so this is the new protocol where, if you're 60 or older and you do not have a Social Security account set up online, you're going to receive that statement in the mail. If you're interested and you're tech savvy, statements are also available online at socialsecurity.gov/my account. But you'll need to set up an account and answer a few security questions. Another good source of resource online, by the way, is the retirement estimator on the Social Security website. A lot of folks like to ask very tailored questions to their situation. And a lot of times, I go to this particular calendar to figure that out. And you can certainly do that on your own and just sort of play around the calculators and take a look at different hypotheticals and what if scenarios. So why delay taking Social Security benefits? And again, I just want to drive this home. Bigger checks, right? So, if you look at the benefits with COLA, that last column here, if I apply for benefits at age 62, right? Remember, I leave money on the table, and my benefit with the COLA is $2,100 per month. If I wait till age 70, my monthly benefit's going to be $4,359. Much different, obviously. And so my Social Security payout is higher, number one, and it's going to be higher for my entire lifetime. Okay, so again, something when people ask, how do I maximize my Social Security payment? This is the way to do it. So the first thing you could do if you want to improve your Social Security, maximize your payment, is that you can always improve your earnings record, right? So first thing you want to do is you want to check that annual statement, make sure the earnings record is accurate. Now, mistakes are rare because the earnings on file at Social Security, they're reported by employers when they submit your Social Security taxes. But mistakes do happen. And this is especially true for self-employed individuals whose earnings records may be taken from their tax returns. So again, you want to make sure it's accurate. The next thing you want to consider is to improve your earnings record. If you don't have that 35 years of earnings, you can definitely work a few more years. And so those years won't be filled in with zeros, especially if you had several years of low earnings because you were out raising a family and et cetera. You want to make sure that you replace those zeros with some number higher than that. Applying for benefits at the optimal time, again, it's going to be different for everyone who's listening to me on this call. It really depends on your income needs, both not only now, but in the future as well, life expectancy, and also keep in mind this, your spouse's life expectancy as well. Remember, women live longer than men, so that's important to sort of factor into your calculation. The next question that we get is, are Social Security benefits taxed? And unfortunately, yes, they are. One important consideration in deciding when to apply for benefits is whether or not you want to work in retirement. Now, if you apply for benefits before you turn full retirement age, right? So in other words, my full retirement age, let's say it's 67, but I apply for Social Security at age 62, okay? Starting in 2022, if I'm working, $1 in benefits will be withdrawn or withheld for every $2 that I earn over $19,560. Now that $19,560, that's a 2022 limit. It was lower last year. So that's new for many of us. But again, you don't lose this money. I think it's important for me to clarify that. The government, yes, they do withhold it for you. But what's going to end up happening is that once you hit your full retirement age, Social Security is going to basically increase your monthly benefit to reflect the money that they withheld because you were out there working, earning more than $19,560. So again, you don't lose it. They simply just give you a higher payout once you hit full retirement age. And just so you know, the Social Security Administration, they make these adjustments on a yearly basis. So this table here shows us the taxation of Social Security benefits, and it's based on different income levels. So income, quote, and I'm quoting here, you can't see me, in this case means provisional income. And that includes your adjusted gross income plus 1/2 of your Social Security benefit, plus any tax exempt interest from, say, municipal bonds, okay? So if your provisional income is under $32,000 for a married couple, no benefits are subject to any kind of taxation. However, if your provisional income is between $32,000 and $44,000, up to 50% of a married couple's benefit can be subject to taxation. Now, that's not, some people hear me wrong here. I'm not saying you're getting taxed at 50%. I'm saying 50% or half of your Social Security benefit is subject to taxation. Whatever your tax bracket is, that's what will be applied to half of your retirement benefit, Social Security benefit, okay? If your provisional income is $44,000, up to 85% of your benefits are subject to taxation, okay? So just remember, the important thing here is that up to 85% of your Social Security benefits can be subject to tax depending on how much income you have. And the key thing here to remember is provisional income, which includes tax-free sources tax exempt interest that you might get from municipal bonds. And a lot of retirees often look to municipal bonds or municipal bond funds or ETFs, doesn't matter, because they want to receive tax exempt interest. that's going to count against you when it comes to Social Security benefits. So again, something to keep in consideration and have a conversation if you hold a lot of municipal bonds with your financial advisor. Now, you can minimize taxes on Social Security. Now, here are some ways most people do it, right? So they lower their investment income. So they lower their bond holdings, their tax-free holdings especially. But also consider the required minimum distributions from your IRAs. That's another trigger point here, because that may cause you to be in a higher tax bracket. The takeaway here is that if you have a high IRA balance, a traditional IRA balance, and you don't start drawing down funds, if you wait till your required minimum distribution is due, it used to be 70.5, now it's 72, that can put you into a higher tax bracket. So again, something to be aware of, especially if you're already in retirement. You don't want to end up in a higher tax bracket, certainly. Also remember that, if you're 65 years old or older and enrolled in Medicare, your Part B monthly premiums will be deducted from your Social Security check. And as you can see here, if you claim early, your Medicare Part B will always eat up a larger percentage of your Social Security benefit than if you wait until your full retirement age, for example, or later even. So in 2022, let's say a Part B premium, I believe it was $170.10. Let's assume that your PIA, your full retirement age, is $2,600 a month. Now, if you claimed at age 62, your benefit is 70%, assuming your full retirement age is 67. Your Part B is going to chew up 9% of your Social Security benefit. If you wait and you claim at age 70, your Part B is going to eat up about 5% of your Social Security benefit. So that's almost 50% difference. So again, something to be aware of. A lot of people have options and they can sort of avoid paying a higher percentage of Social Security toward Medicare. Other folks not so lucky, right? And we have to consider other things. But again, just something to be aware of. Just to wrap this section up, the key things I'd love for you to take away here is if you apply early for Social Security, your benefit's going to be reduced by 75% or more. Okay, and that remains at that percentage for the rest of your life. It will never go up to 100% at that point once you reach full retirement age. Cost of living adjustments, they magnify that impact of early or delayed retirement because that annual cost of living adjustment is applied to either the lower or the higher benefit amount. And this causes a big disparity each year as a cost of living adjustment is added to your benefit. It can either magnify it or minimize it. Keep in mind also that your benefits could be taxed and further reduced by Medicare premiums. And don't let the earnings test discourage you from working in retirement. That's that $2 withheld for every dollar that you go over to $19,000 and $500. Don't let that discourage you. If you're trying to replace zeros or lower earning years in your 35-year history, by all means, work. You'll get that money once you hit full retirement age, and the Social Security Administration will adjust it upwards. And finally, delaying benefits may give the surviving spouse more income. And that's something that we should all seriously think about. And it's a very important point to consider, especially as we talk about some of the spousal the spousal claiming strategies that we'll talk about in a little bit. So for couples, you should always maximize in general, and this is our insight here. You always want to maximize the higher earner's benefit to protect the surviving spouse, because they're going to automatically go into that higher benefit amount. So high earning spouses are encouraged to delay taking Social Security benefits to age 70, because that's going to give their spouses the highest benefit when they die. Okay, and I'll walk through a couple scenarios to sort of drive that point home. So keep in mind, Social Security was instituted in an earlier era, right? So that's when most married women didn't work. And to give women a measure of financial security in their old age, the program now offers spousal benefits, but it's a relatively new benefit. And it's important to note that spousal benefits apply to either gender, including same-sex spouses in any state. Doesn't matter what state you live in. Also, common law marriage is acceptable if your state that you reside in recognizes it. Okay, so in our example here, the spousal benefit is 50% of the higher earner's PIA, primary insurance amount, if she applies for it at her full retirement age. So if John's PIA is take a step back. If John's PIA is $2,000 and Jane's PIA off her own work record is $800, okay? When John dies, her benefit will go up to $2,000 per month, which is a $200 increase from her own work record. And that can happen at any time. And again, Social Security always wants to give you the highest amount that you're eligible for at any given spot in time, which is why when you call the Social Security Administration desk, or office, they can't tell you what to do and they can't give you advice. They're going to give you the highest amount that you're eligible for that day that you call. Your situation may change in next year or 5 years from now, and so they may give you a different answer. So it's important to recognize that. Again, it's best to speak with John and his team. They have special calculators that they can run different hypothetical situations for you. But yeah, Social Security is helpful, but keep in mind, they're going to give you your highest benefit for that particular moment. Also, here are the rules for spousal benefits. The primary worker has to have filed for benefits. The lower earning spouse has to be at least 62 to receive reduced benefits, or she or he can wait till their full retirement age to receive full spousal benefits. Okay. Keep in mind, spousal benefits do not earn delayed retirement credits after full retirement age. So how we sort of maximize spousal benefits? So we used to have other filing strategies, restricted application, file and suspend, for those of you who may recall that. Unfortunately, those were sunset. Some folks have been grandfathered, but you can't apply for that anymore. So unfortunately, we only have this one hybrid strategy, which isn't really a strategy. It seems to me more common sense and intuitive to most of us. And here it is. So if the lower earning spouse's primary insurance amount, or PIA, is less than 50% of the higher earning spouse's PIA, you may want to do this particular hybrid strategy. And in this situation, a lower earning spouse goes ahead and claims early, right? This gets income started as soon as the lower earning spouse turns age 62. So basically, we're getting income into the household. And what's going to happen is the higher earning spouse will claim their benefits at age 70 in order to maximize that higher benefit that can cover both lifetimes. So not only the primary or the higher earning spouse, but the other spouse as well. So again, that's really the only strategy that we have, but it's something to consider if you have, especially if you have spouses that are within 4 years of each other. That works really well. But again, this is something that we can sort of work with you on a calculator and see if it applies to you. So what if you're widowed or divorced? And it does, we do get those questions a lot. So yes, you may be eligible for survivor benefits. It's called divorced spouse survivor benefits, or also divorced spouse benefits. And by coordinating these benefits with your own work record, you might be able to increase your total benefits into the household. But first, let's take a look at some basic survivor benefits that a spouse would receive. So there are two things to keep in mind when you're talking about survivor benefits, right? Number one, the survivor benefit will depend on the age at which the deceased spouse originally claimed their Social Security benefit, right? And the second important thing is The survivor benefit will also depend on the age at which the widow claims survivor benefits. Okay, so it gets a little tricky. There are special floors. There's an 82.5% floor. Let's say, for example, if I apply for Social Security at age 62, okay, the earliest I can receive it. Remember, I'm leaving 25% on the table. I'm only receiving 75% of my payment. If I die and I'm the higher earner, my wife would receive not 75% that I was receiving. She would receive that floor of 82.5%. So it goes up a little bit. And then the second part is, when the surviving spouse applies for benefits, which is, again, if it's before your full retirement age, you're always going to receive less. And here's our example on this particular situation. Just because of time, I'm going to sort of skip around a little bit, if it's all right. I don't want to miss anything. Here are the rules for survivor benefits. So a couple must have been married for at least 9 months at the date of death. Now, there are a ton of waivers and exceptions for this date of death, the 9-month rule, I should say. So, don't be scared off by that. Also, the survivor must be at least 60 for reduced benefit, 50 if they're disabled, or, of course, full retirement age to receive their full benefit. Survivor benefit is not available if the widow or widower marries before age 60, unless that marriage ends. And also, divorced spouse survivor benefits are available if that marriage lasted at least 10 years. And the famous case here is Johnny Carson. If you recall Johnny Carson, he was married a few times, but he has 4 wives, 4 receiving Social Security off of his work record. So it is possible. So divorced spouse benefits are similar to spousal benefits. You have to be married 10 years or more. The person receiving divorced spouse benefits has to be unmarried. That's the key. The ex-spouse, it has to be at least age 62. And if the divorce was more than 2 years ago, the ex-spouse does not need to have filed for benefits. The rules for divorced spouse benefits: more than one spouse can receive benefits on the same worker's record. Benefits paid to one ex-spouse does not affect or impact those to the paid to the original worker, the current spouse, or any other ex-spouse. One has nothing to do with anybody else's benefit, and I think it's important to note that. Also, divorced spouse benefits stop upon remarriage of the spouse collecting benefits as well. So just to wrap up this section, Social Security offers inflation-protected income. You can't outlive it, which is great. It also includes benefits for your survivors. That monthly benefit will be reduced if you claim early, of course, in any situation. And couples should always maximize the higher earner's benefit for the surviving spouse. If you're widowed or divorced, you may be eligible for benefits that can increase your benefit check. I also think it's important to consider Social Security in the bigger picture, right? Holistically. We tend to just think about it as just one benefit. And for many Americans, it's true. That's the only source of retirement income. But if you have a pension, IRA, or 401k, you want to make sure that you're taking out your required minimum distributions. If you have large balances, don't wait until age 72. You may want to do it earlier. Also, do you plan to work, or what other assets do you have? Do you have real estate income, etc.? And lastly, I'll just stop right here. What can Social Security personnel do and they can't do? So what I've come to realize, and I've gotten this from a number of Social Security retired officials who I work with, they all tell me the same thing. If you're asking a question in Social Security, send an email. Because all too often what happens, especially if there are new rules and regulations, they may give you improper advice, and they start you along a path, or get you started with your benefits, and they're wrong. And a lot of times it's very hard to make that change. It's just time consuming, and you have to show paperwork. It's just brutal from what I've heard. So to solve for all that, it's best to use the Social Security email address and write out your questions there and just keep those for your records. Also, Social Security folks can estimate your individual benefits, no problem with that. And they can tell you the amount that you're entitled to now, but they cannot project future benefits through scenario planning, and they can't give you any kind of tips or strategies to maximize your benefits, unfortunately. That's something certainly John and his team at the Fitzgerald Group can certainly help you with. So at this point, John, I will turn it over to you to close us out. But thank you for your time this afternoon. My apologies for going 8 minutes or so over, but I hope you found this helpful.
Ruben, thank you so much. So we are going to have any and all questions. Just email me if you have any questions, and we'll try to get answers for you. Everyone, thank you for attending, and hope everyone has a good night. Ruben, thank you again. Thank you to you and your team, and thank you to all of our clients and friends on the call. Have a good night, everybody. Thank you.
My pleasure. Take care all.
Bye-bye.